If you've been watching the crypto markets, you've probably noticed Ethereum's price has taken a pretty serious hit. And trust me, it's not just random noise. So today, we're going to decode the key signals that are putting pressure on ETH. Let's just jump right in.
So the big question on everyone's mind is pretty simple. Why is Ethereum falling? We're going to dig into the real story behind this downturn, and it really comes down to three core factors. And look, we're not talking about a tiny little dip here. Since September 12th, we've seen a drop of nearly 15%. A move that big is never an accident. So let's pull back the curtain and see what's really going on. First up, it all starts with the most classic rule in economics: supply and demand. And right now, for Ethereum, that balance is, well, it's way off, and it's creating some serious headwinds. Okay, so here's the heart of the problem. In just the last month, more than 76,000 new ETH got pumped into circulation. At the exact same time, demand is falling off a cliff because, well, fewer people are actually using the network. So you've got more coins floating around, but less reason for people to buy and use them. That's a textbook recipe for a price drop. Now, to really get why supply is rising, you have to understand something called the burn rates. Every single time a transaction happens on Ethereum, a little bit of ETH is just, poof, gone forever. It's burned. But when network activity is low, you have fewer transactions. And fewer transactions means that burn rate slows way down, leaving more ETH in circulation. The bottom line, there's just too much new Ethereum hitting the market, and not enough demand to soak it all up. That imbalance is the first huge force we're seeing push the price down. But, it's not just about what's happening on the network. We also have to ask, what's the big money doing? The moves made by these huge institutional investors, they tell us a lot about how confident the market is feeling overall. And wow, the numbers here are pretty telling. Investment funds focused on ETH have seen a massive $389 million flow out this month. I mean, just to give you some perspective, that is the biggest monthly exit we've seen since March. That's a really powerful signal that the big players are taking a step back. And this creates a kind of chain reaction. See, when these large institutions start getting nervous, it can really shake the confidence of everyday retail investors. A lot of people look to the big guys as a sort of green light, and when that light isn't on, smaller investors might just decide to sit on the sidelines, which, you guessed it, reduces demand even more. Okay, so we've got an oversupply issue, and we've got institutions getting cold feet. So the next logical question is, how does this all translate to the price charts? Let's look at what the technical signals are telling us about where the price could be headed. One of the best tools for this is the on-balance volume, or OBV. The easiest way to think about it is like a tug-of-war tracker between buyers and sellers. When OBV is rising, it means buying pressure is strong. But a falling OBV, which is exactly what we've seen since September 12th, suggests that right now the sellers are winning that fight. This basically leaves us with two potential paths. In the bearish scenario, if the selling keeps up, the price could drop to test a key support level. Think of it like a price floor, right around $3,875. On the flip side, in a bullish scenario where demand suddenly comes roaring back, the price could rally to challenge the resistance level, the price ceiling, up near $4,497. Those are the two battlegrounds you're going to want to watch. So, you add it all up, an oversupply problem, fading confidence from the big money, and charts that are pointing to more selling pressure. Now, we all know markets can turn on a dime, but it really makes you ask the bigger question. Is this just a temporary dip? Or are these cracks starting to show a more fundamental challenge for Ethereum's future?